Good morning, everyone. Welcome to Prebell with William in India. My name is Rakshaka Kungari, Equity Research Analyst. Before we go ahead into this podcast, the disclaimer is registration granted by SEBI, membership of BASL, and certification from NISF in no way guarantee performance of the intermediary or provide any assurance of returns to investors. Investments in securities market are subject to market risk. Read all the related documents carefully before investing. Here is the Nifty's daily chart taken from our website. As you can see here, for the last 5 to 6 trading sessions, the Nifty, after breaching its 21 DMA, which is a green line here, it is not able to recover from the lows and not able to reclaim 21 DMA. But 50 DMA on the downside act as a very good support, which is a very positive sign. So currently Nifty has been hovering in between 21 DMA and 50 DMA. So we are going to see this narrow action or range bound action going forward as well. Until and unless this DMAs are reached or taken on the higher level or on the lower level, we would see range bound action on the Nifty front. Coming to the market status, we are in confirmed uptrend with a distribution day count of 2 and Nifty clearly trading above its 50 DMA. But if the 50 DMA is breached and DD count, that is distribution day count, increases to 4 or 5, we might change the market status to under pressure. Currently, we are having good number of stocks in the portfolio, and if there is any good stock which is looking good on the fundamentals and on technicals, we would take it and add it to portfolio. Once the market status is changed to under pressure, our exposure towards the market we try to minimize, and also the breakouts probability of success is lower when the market status is in the under pressure. Earnings season is still continuing. Most of the companies have reported from the Nifty 50 space, but there are other companies from the mid and small cap spaces are reporting their numbers. Starting with Vodafone Idea has come up with their numbers. Revenue was down 0.9% year-on-year basis to 10,500 crores of rupees. For the quarter it has reported losses, but the losses have narrowed almost 1,000 crores from 7,675 crore in the last quarter, the corresponding quarter last year, to 6,400 crores of loss in this quarter. EBITDA margin was down 90 basis points to 40%. And if you look at the average revenue per user, ARPU was unchanged at 146 rupees per user. NMDC has come up with the numbers. Revenue was down 0.4% to 5,400 crores of rupees. Profit on the other side was seen an improvement of 18% to 1,900 crores of rupees. IRFC revenue was up 1.4% to 6,700 crores of rupees. Profit on the other side grew in line 1.6% to 1,500 crores of rupees. Apart from these earnings, GR Infra has been in the news because it has received a letter of intent from KE's REC Power Development and Consultancy Company. This is to establish a transmission scheme for the integrated plant in Karnataka. The overall project is valued at 53 crores of rupees. In the today's session, we are looking at companies such as IRCTC, Muthoot Finance, Ashoka Buildcoin, Hero Motorcorp, Hindalco Industries, Pyramid Enterprises reporting their numbers in the today's session. And if you look at the institutional activity yesterday, FIAs were net sellers. They have sold more than 4,600 crores of Indian equities. On the domestic side, and DIAs have bought given good support for the Indian markets. They have bought more than 4,400 crores of Indian equities. Overnight, US market closed, you can say flat, except for Dow Jones, which closed 0.3% lower, and Nasdaq closed 0.2% higher, whereas S&P were closed 0.04% higher. So there are no major groundbreaking global cues from the US market. If you look at the Asian markets, both Kospi and Shanghai were trading in the negative territory. Nikkei is trading with a gain of more than 2%. This is major because Nikkei trading holiday was there yesterday, so that action was clearly visible in the today's session. If Nifty is indicating a muted opening for the Indian markets, So there is no major global cues on the upside or on the downside, and GIFT Nifty is also indicating a muted opening for the Indian markets. So we might see Nifty opening on the muted action, and we going forward as well in that during the session we might see mostly range bound action on the Nifty space. For the chart of the day, we picked Inox Field. This company has been looking very good. Currently, it is broken out from its stage 4 complete handle. It's a slightly late stage base according to our methodology. But if you look at the base pattern has been very good. The volumes have dried up, proof of base formation. The breakout volumes have been also very good. The ratings have also been very good, except for the EPS at 62. But technical ratings are very good. Price strength of 95, MID rating of A minus, and other sections such as number of funds has been consistently improving for the company. Again, a very good indicator. Overall, both ratings and chart wise, it is looking good. And currently, it is extended from the pivot. You can see 90% from the pivot. So there is no ideal buy range to accumulate. But if it pulls back and comes back to the range bound, this blue highlighted area, that is ideal buy range, you can consider. But also, please keep in mind that it's a late stage base, fourth stage base. So the breakouts happening from the late stage base might tend to become unsuccessful. So that also keep in mind before taking positions. Thank you for joining today's people. Have a good trading session.